Yo, what's good people, welcome back. This video is going to be quick, but it's going to be a video on just understanding briefly about key levels and the power of understanding key levels on price action trading. So I just want to break down a trade that I entered yesterday on GU. And as you guys know, I trade on price action, and my idea is to teach you guys how to actually understand price action itself. So here we had, I'm on the replay mode, but here we had GU, okay, so we can clearly see on the 4 hour that we know structure is biased. We are biased, the structure is trending up, and we can clearly see that due to the push, exhaust, push, exhaust. Okay, so you understand that. You understand how, if you look at some of my older videos, you can see me talk about market structure and how market moves in certain patterns, and a push and exhaust phase. Okay, so the idea of this and the idea of key levels is understanding that what key levels are. Key levels are basically that the market are drawn to these areas before making its next movement. Okay, so the market's not just going to randomly move anywhere on your screen or anywhere from where it is on price. The market will, and the price will go to a key level, key area in the market before making its next move. So it's about identifying these areas and then trading from them if you're a price action trader. Okay, this is my strategy and this is how I work. So we can clearly see here on the 4 hour we're pushing up, coming down, pushing up again. And here we can clearly identify our key level. Once we respect this area, we will have drawn it, okay? So as you can see it here, so if this weren't here, my key level would have been down here. So you can identify key levels by basically seeing where the price has gotten before and then reacted to that area. And you can clearly see here that this was a key level, so I would have drawn it across here. And also you can see, if I drag it along a little bit, there's a wick rejection here, fake out, wick rejection here, push through. Okay, and so a little tip is that price, if it's a key level, price will never open or close in that area. So obviously here this is a fake out, it's pushed out, opened again here and pushed down again. So price will, the only time it's going through it, or the only time when price is going to be inside it is when it's going through it. Okay, so this is one of our key levels. And also another thing is with key levels is you will see wick rejection in that area. And the idea of drawing these rectangle key level areas is that you keep the candle out of the box or the area and you put the wick inside of it. Okay, so here we identified this key level. The next thing for me would be that you're letting the market play out. You understand that the market is, you understand the structure of the market, how market is pushing up and then pushing down again. We have not broken this recent high or low, so we know that we are still in a buy market, okay? And we know that here is a key level. Why? Because price has wick rejection here. We can also drag it along here. We see wick rejection here, wick rejection here, wick rejection here, sorry, broken through, and then here we have created a 4 hour support. So the idea of key levels is using them as a way to trade from. And identifying the key levels is just by simply finding wick rejections and where the price has moved from these certain areas. So obviously you can see here and here. Next was then I broke it down to the 1 hour. And we can clearly see here that price is starting to push up. Now a lot of you people, what you would have done is you would have entered as soon as we hit it here. It would have come up, come down again, come up and then come down again. You want to wait for the market to come back to a key level, okay? So we know we have identified that this here is our key level, but you don't want to straight away trade, but you want to wait for it to do its push movement so you know where the momentum is still going, and then you want to look for it to retrace. You want to look for the market to come back to the key level and then trade from there. Never trade from anywhere on the price. Wait for market to come to a key level. I keep saying key level, but this is key. So basically, we are waiting for a retracement. And how to find these retracements is, yes, you can use the fibs, obviously here, from this impulse move here for wick to wick. Okay, we can clearly see the 61 fib here. We could wait for it to come there. And I've got it written up here, but this is something different. So we want to identify where the market will come back to, and then we can trade from it, okay? So here we can clearly see 1 wick rejection, 2 wick rejection. We have wick rejection here, and also we're getting it around here. But we know where price has pushed up and failed to go up. There is a level around here, and you can see that by the wicks. The wicks will show you roughly where these levels are, okay? So we're drawing this in. We're drawing it from here, coming in. Trying to not keep the bodies in it, but it's okay if it does. This is simply pushed out, pushed back down again. It's almost like a fake out move. and we've got our rejections here and here. So you're looking for the most rejections in that area. You're looking for where price has moved from that area. So obviously here, price has come down twice, failed to break, but you know this is a key level, and this is giving you confidence that the market is going to go up, because it's not able to break this level and therefore continuing, and it's come down back to this key level we had on the 4 hour. Okay, so now all we're doing is we're waiting for price to come back to our level. We're waiting for price to retest this key level in the market, because as I told you, price will never randomly move from anywhere in the market. It will come to a level, decide what it wants to do, and then make its movement. And it's about identifying these levels. Okay, so let me just fast forward a little bit so you guys can see how price moves around this level. Okay, price has gone up. Here we go. This is exactly what we're looking for. We're looking for price to come back in, and this is what I was waiting for. And the idea of this is you need to be patient. I've always said about being patient in your trades and just waiting for the market to come back to these levels and then identify what it wants to do from here. So now we know price has come back to our key level. The idea is that you then go into a lower time frame. And the idea of going into a lower time frame is then to identify where the market wants to move and where it's going to move. So if we broke through, I'll be looking for sales, because we know that the market has broken a key level, and maybe look for a retest and continue pushing down. But we want to look for the market to respect this key level and then create momentum back up. Okay, so here we're still respecting it. Okay, here you see clearly the wicks. Okay, you see that the down motion here is being stopped out. The sell momentum is being lost through these wicks. The market is losing momentum, and this is about understanding candlestick, not candlestick patterns, but understanding how candlesticks actually work. Okay, so when you know the market is about to lose momentum, you'll see a loss of these big candles, these big engulfers, and you'll start to see wicks, you'll start to see dojis, as we like to call it. Okay, so now we've identified that this is a key level. We know it's a key level, it's stayed to it, and we've seen it from previous price reacting to the area. And we are simply looking for a change in momentum. Okay, now my thought process behind this trade is, where's the take profit going to be? Obviously our stop loss is going to be down here, and we need to go for the higher time frame to find our take profit. Now a take profit would be the next move in the market. Okay, so looking back from where price has reacted recently. Okay, so we can see here a lot of wick rejections. So my take profit would be around here, and obviously this is the high of this next movement. Okay, so going back to the 50 movement, we've got our take profit. So now all we're doing is we are simply waiting for the market to create momentum. We are waiting for the market to change momentum and obviously start pushing up to give us confidence that the market is going to start going up. Okay, I think my stop loss was actually, I think my take profit was actually slightly higher. I think we had it around here, I think, or was it? I think we're going to go for around here. Okay, so we still see here wick rejections. There is 1, 2, 3, 4. This is market's never closing. Yeah, we've got consolidation around here, but the market pushes straight through it, comes back, retests, continues going up, retests it again, and finally breaks through. Okay, so going back to the 15 minutes, we're simply looking for a switch in momentum. Okay, we see it pushing down, come back up again. Okay, keep going. We're just simply looking for a change in momentum. That is it. And there it is. That's our momentum. Okay, we see it's not a bearish engulfer, but we can clearly see here from the 50 minutes. Okay, we pushed up. This is almost a full green candle. We pushed up. We have actually exhausted this. It's a nitty gritty, but you can see how prices come up, come down again, and then pushed up. This is now our high or low. We're not looking for anything back here for understanding where the market is going. We're simply looking at where we are trading from. We're looking at just what price is doing right now. So now we're in on the trade. We can see the change of momentum. So this was my thought process behind it, and it's about using these key levels to trade from and identifying these key levels. So let's see, obviously, prices then, there you go, hit it around there, take profit. Okay, so it might have been slightly lower, might have been so no, but you get the idea how price, when it gets to a key level, it will react to this key level, and it will then push. It will tell you once it gets to this level where it's going to go. So this was just a short video and just understanding key levels and how they actually work and how you can see it out in a trade that I placed and how they play out. Okay, so if you're probably thinking, okay, what happens if this price didn't react to this area and continued going down? Okay, the price would have continued going down to the second key level that you've got, and it's about finding these levels. Okay, so, and it's simply by going to these higher time frames and identifying them. Where is there wick rejections? We've got wick rejections here, we've got a strong wick rejection here, broken through again, broken up, and then wick rejections. The idea is that you find these key levels and trade from them. Okay, so once you identify the key levels, you can basically trade from zone to zone, as people like to call it. So yeah, if price, it's clear to see, let push up, push down, push up again. It's just about watching what price is doing in these actual key areas. Okay, let me see if I can go back a little bit and try and identify. Okay, here. So we can see this is a strong wick rejection. Okay, we've got wick rejections here, wick rejections here, and we've got a continuation trend. Okay, so let's say you didn't have any of this data, right? You see this and you've seen this. Okay, you can clearly identify that here. Okay, yes, the bodies are in the area, but that doesn't really matter too much, because price, this is a manipulation. Price can push a little bit lower, a little bit higher, and still trade from that area. But the idea is that you wait for the change of momentum in these areas. Okay, so how we've identified this is we can see these wick rejections. Okay, price has wanted to come to these areas. You know that price has to come to these areas of value before making its movement. Price won't just randomly fluctuate anywhere. It moves in certain patterns. It moves to these areas and then trades from these and changes price from these certain areas. So here we've got wick rejection. We've come down, come through. We've now broken it, and then we've got rejection here. We've got wick rejection here, showing us that this is a key level, and we wouldn't trade until we've got confidence that this is a strong level. Okay, so it's pushed up. So some people would have bought early here. It doesn't really matter too much, but we've then come up. Then you run the risk of, okay, we've seen that this is now moving bearish, and some people would have stopped out and not realised that it's still going to continue. Okay, so we've got wick rejection here. We've got what, 1, 2, 3, 4, 5, 6, 7, 8 wick rejections. So we know this is a key level in the market. This is the level, an area of value. Sorry, and then we pushed up again, come back to the level, and then we have just continued up. So a lot of people would get in here, had their profits maybe taken up here, but there's no real level. So what other traders, what they would have done, the more advanced traders, they would have waited for it to create this high, come back down, respect the area, wait for a change in momentum, push up again, and they know their take profit can easily be here, or they can just continue riding it. They could see this new higher low and continue pushing up. This was just a short video. Tried not to make it too complicated, but I just wanted to let you guys know and help you that there is key levels in the market, and by identifying them, you can trade from these areas, not just trading anywhere, but finding the key areas, finding where the wick rejections are and where price has moved to prior and then reacted to these areas. And once you can start to develop and get a feel and find out where these areas are, you'll begin to be more consistent. It's about being patient, waiting for the price action to come to these areas and then trade from them. If this has helped you out, guys, give it a thumbs up. I'll see you in the next one.